Good evening, Doctor. So today it's my honor to present the video presentation regarding the company that we have selected. There are 3 companies in total. Myself, I'm doing for the Tabung Haji Plantation. There are 2 group members, Nazura and also Komathi. Komathi is doing for IJM Plantation, and Nazura is doing for Seng Plantation Holding. Plantation sector in Malaysia. Since the introduction of Dasar Ekonomi Baru (DEB) in 1971, the plantation sector have been consistently contributing to our GDP growth in Malaysia. So financial analysis on the sector will be relevantly significant. Why? Because this is to address the strength, the progress of the sector. So throughout this report, what we'll do is that we will evaluate all these 3 firms that we have selected in terms of the profitability, liquidity, and also the financial stability of the plantation sector. The analysis will also discuss in terms of the stockholder analysis, risk and return, investment return, capital structure, dividend policy, and also value of the company generally. At the end of the report, we will come up with a conclusion, or rather I will say a recommendation, which firm that having a strong position in the market. So let me briefly start with Tabung Haji Plantation. So Tabung Haji Plantation have been part of the Malaysian plantation industry since 1972. Currently, it is entering the second growth stage since it is publicly listed in 2006. The significant result had been shared in their annual report each year since 2006. So the scope will be, we are going to take the 5 years financial result, and we'll try to explain and present in this report. Ownership structure for the Tabung Haji Plantation. So Tabung Haji Plantation consists of constitutional stockholders, which Lembaga Tabung Haji is the main block holder with majority share of 72.82%. This have been derived, the ownership structure have been illustrated in the slides. You can see that in terms of ownership structure, there are block holders for Tabung TH Plantation. There are also institutional holders such as Employee Provident Fund, and there are also proxies and also individual holders, which consist combined shareholding is about 19.65%. These are all the individual stakeholders. So one thing about Tabung Haji TH Plantation, one thing interesting about TH Plantation is that it is a government-linked company. Tabung Haji owns about 72.82% of the shareholders in TH Plantation. Tabung Haji is directly reporting to Khazanah. So indirectly, all the policies that we made for TH Plantation will be influenced or will be closely monitored by the government. Let us see on the beta of the firm. So the beta of the firm is about 1.21, which is slightly higher than the plantation sector beta, which is recorded at 0.64, and the industry beta, which is at 0.89. So what is the factors that influence this beta value? First is in terms of the internal risk. So what are the internal risk? The credit risk to or from the subsidiary, and also the financial position of the firm. So these are the 2 factors, internal factors that contribute to the beta value. How about the external risk? So the external risks are the market risk generally, and also the currency risk. The market risk will reflect into the stability of the crude oil price, and the currency exchange mainly is affected if they have any subsidiaries that is out of Malaysia, which is using USD as their currency rate. What they have proposed for 2016 is that for the disposal of their THP Gemas as a asset to DuPont and Lex Enterprise, which they have taken place on 25th November 2016. So this is expected to have a good result in terms of gain to the TH plantation, whereby they are estimating about 109.7 million of revenue to be collected from this liquidation of the asset. We can see from the trend analysis chart, the revenue have dropped, and also in terms of their profit margin. So this is both tied together, whereby what we can see in terms of the operational cost, TH is not managing well compared to the other two firms. So in terms of dividend payout, we can see throughout the years the dividend have been dropping significantly, and for the year 2014 they have paid 2 cent dividend to the shareholders. So this is basically in terms of their investment return. So the next what we will discuss in terms of the profitability ratio. We can see that for TH Plantation, the profit margin have been declined, and all the firms have shown an average performance compared to the industry. This is relatively explains that what we can say is that Seng had demonstrated slightly better in terms of their expenses management, even though whereby they get the net margin profit is higher compared to the other two firms. So next what we're going to see is that the management effective for all the three firms. So here what we are going to analyze is the trend analysis. So from the trend analysis, we can see that for the past 5 years, in terms of return of equity, all the firms are declining in a decline mode, especially for TH Plantation. This is mainly because they are investing, they are purchasing new assets. So the return on equity have dropped significantly. But one of the positive point is that in 2015 we can see there is uptrend. So here it is not that bad. It is showing a good improvement result through their strategies that they have put. So last but not least, throughout this assignment, what we recommend is that we notice that there are two firms that performing consistently. One is IJM Plantation and the other one is Seng Plantation. Throughout the share price that they have, IJM Plantation had 3.34 3.34 of share price. It is about 0.91% increase in their share price, and Seng Plantation having about 2.70 2.70 increased by 0.75%. So meanwhile, TH Plantation remains unchanged at 1.15%. So what we understand is that this could be mainly due to the stock are undervalued, as what we have explained in the earlier GPRV chart. What we recommend is that if any investment can be done, or any investors are interested to do any investment in the plantation sector, from our point of view, from these three firms, we will recommend Seng Plantation to be considered by the investors. Overall, the performance are good. The firm have adequate price, and they are also offering the basic earning per share at 0.12 cents, which is higher than the other two firms. Well, thank you.
Good day, Dr. Rasidah. Komathi, Doctor of Parthasarathi. My ID number is ZP6032. Okay, this is our group assignment. Okay, we are three of us, Imran and Nazura. In my part, I will be talking about IGM Plantations Corporation. IGM Plantations. Okay, what is IGM Plantations about? IGM Plantations is Berhad is engaged with cultivations of oil palm, mining of fresh fruit bunches, and trading of crude palm oil, which based in Sabah. So these IGM plantations, just the plantation itself, the office itself is in Sabah. Only the corporation is in Malaysia, but we have the physical office management in which is stated in PJ. So what we see in the history of the IGM plantation, it is started earlier at 1985 by Koperasi Pembangunan Desa, and it was joint venture with the Koperasi Pembangunan Desa, which developed to enhance the Desa Talisai. Okay, this IGM plantation is a big company which is listed in the Bursa Saham Malaysia Securities Berhad around 2003. IGM plantation increases palm cultivations over 7-fold itself in land bank of approximately 30,000 hectares in the Sandakan and Subud region in Sabah. So their main plantations is they are focusing in the Sabah area. Later on, they expand their business into the Indonesia for oil palm cultivations. So now we look into the shareholders. So when we talk about the shareholders, the directors in the IGM consist of 7 members, a mix of executive and non-executive. Majority shareholders comes from individual, where bigger shareholders come from Tan Sri Dato Wong Si Wah. Okay, there are 16,786 shareholders with a number of shares 580,460. Okay, the top 30 shareholders are the most shareholders in the individual investors, and the main shareholder are enough to dominate the group, and the BOD consists of well-balanced mix of executive and non-executive. Okay, based on what I done with my report, the IGM plantations, the beta for IGM plantation is 0.91, which the company is doing well, and it indicates that the higher the beta stocks tend to be more volatile and therefore the riskier, but they provide the potential of higher returns. So the company gaining more returns year by year by the process of the company. And when we see the risk, where the management and the group of the company, they always view the financial risk, which is the risk is mainly on about liquidity and also the capital risk. So when they always concentrate the financial risk, so they always check in the changes of the value of the financial instrument in the market and the interest rate. So when there is a changes, but so far there's no significant interest being varied in financial assets, whereby the changes market interest rate, and normally they are always in the short term nature and always in a fixed deposit for the selected parties. Okay, there is regulation to determine and avoid maximum exposure of credit risk, which is dealing with the counterparties of higher credibilities. So when we are talking about the WACC, which is weighted average cost of capital, okay, normally WACC is a company's assets. It's normally financed by debt and equity. So in order to finance the debt or the company's asset, we use the WACC to calculate the capital asset pricing model. So from there we can know the estimate cost of equity of the firm. and cost of common equity raised by internally reinvested earnings. Now we look into the investment return. IGM Plantation have a lot of investments. When we see at the their annual report in 2016, they are more in the measuring in the fair value through profit and loss of the irrevocable options and inceptions to present changes in fair value. Okay, a debt instrument is measured at amortized cost. So the amortized cost is including about cost accounting and also the liabilities with bifurcations and embedded derivatives. So in the other part, value changes. So due to the entity's own credit risk, record in the other comprehensive income rather than income. So the difference between two disposal proceeds, the carrying amounts of the investments are recognized in the profit and loss. So the next we are looking in the dividend policy. All the shareholders are paid through the dividend policy. The amount of the dividend is recognized as a liability. So the amount is declared or authorized as a discretion of the group, whether or not, before the end of the reporting period or end of the reporting period. So it will be directly declared and distributed to the shareholders, and the equity instruments always share among themselves. So IGM Plantations able to generate sufficient cash flows from its operations. When we see the annual report the record, the financial ended on the 31st of March 2015. The direct a single tier interim dividend 6 cents per share on 880,580,460 ordinary shares was paid on 7 July 2015. So it shows that the company, the IGM, is doing well, and they declared in a good value amount of the shares to the stakeholders. So on the 26th of May 2016, the director declared single tier interim dividend amounting 5 cents per share in respect of the financial year ended 31st March 2016. Okay, now we see the single tier interim dividend will be paid on the 13th June 2016. Every member is entitled to receive dividend at the evening on the day itself, or the 5 p.m. on 24th June 2016. So now we look into the valuation. Okay, when we see about the valuation, what the valuation company, how they grow, how they obtain multiply both return and equity and the retention ratio. Okay, IGM Plantation has revealed Plantations expenditure in the group, and the company has carried under the cost model carrying amount around 64,117,000 in 2016 compared to 2015, which is 64,170,000. So the company amortizes Plantations infrastructure in equal annual installments over the period of the respective leases, ranging to the 21 to 81 years. So the remaining period, which is 72 to 83 years, the leasehold land classified as finance leases. So it's more to value on the plantation, which is buildings, plant, machinery and equipments, motor vehicles, office equipments, and also the fittings. So the company is more to agriculture, produce growing on the bearer plants and measure in the value less cost, sell under with fair value changes, recognize in profit loss and produce growth. So this is all about the presentation about IGM Plantation. Thank you, Doctor.
Assalamualaikum warahmatullahi wabarakatuh, Dr. Rasidah. My name is Nazura binti Johar. My ID number is ZP603240. I am going to present on Seng Plantations Holdings Berhad. incorporated in Malaysia as a private limited company on 18 April 2007 and then converted into a public limited on 3 May 2007, Seng Plantations Holdings Berhad was listed on the main board of Bursa Malaysia Securities Berhad on 16 November 2007. The registered office is located at 21st floor, Menara Seng, Kuala Lumpur. Seng Plantations is one of the largest producers of sustainable palm oil in Sabah. It is focused in the upstream activities in the palm oil industry where it grows oil palms in its estates, harvests and processes fresh fruit bunches into crude palm oil in its own mills. As a major player in Sabah, Seng Plantations prides itself in its operational efficiency as it consistently records one of the highest yields for FFB, the fresh fruit bunches. The company's total planted area includes approximately 35,680 hectares out of a total area of 39,800 hectares. Of the total planted area, approximately 32,440 hectares are mature areas. The average age of the palms of the planted are over 15.5 years. Seng Plantations' current total land bank stands at around 40,000 hectares, of which about 36,000 hectares is planted with oil palm. It has a total of 16 estates and 4 oil mills, all located in Sabah, notably in Lahad Datu, Tawau and Kota Marudu regions. As a seasoned planter, Seng Plantations has adopted the industry's best agricultural practices in its estates and is a participant of the RSPO certification program. Over and above the RSPO certification, it has also set aside areas for biodiversity conservation, including the conservation of Bukit Kibus, maintenance and protection of riparian buffer zones, as well as retention of designated high conservation value areas in our plantations. This is part of its commitment for a sustainable future. Seng Plantations Holdings Berhad has a market capitalization of 2.136 billion as at 31st December 2016. The authorized share capital of the firm is RM 1 billion with a number of shares of 800 million. There are 9,071 shareholders of the firm. Seng Consolidated Berhad has been the blockholder of Seng Plantations Holdings Berhad with a majority share of 53.04%, representing 424,183,300, which is 424,183,300. The ownership concentration owned by Seng Consolidated Berhad resulted in a strong voice and monitoring power over Seng Plantations Holdings Berhad managerial decision. In general, when a blockholder has a share of at least 51%, the company tends to have 100% control of the firm. Other shareholders include Innoprice Corporation Sdn Berhad, which is 15%, Citigroup Nominee Sdn Berhad 8.15%, Lembaga Tabung Haji 5.78% and indirect 18.03%. Beta indicates whether the investment is more or less volatile than the market. A beta less than 1 indicates that the investment is less volatile than the market, while a beta of higher than 1 shows that the investment is more volatile than the market. Volatility is measured as the fluctuation of the price around the mean. Higher beta indicates higher volatility and more risky but has a higher potential returns. Lower beta indicates lower volatility and less risky but has the potential of lower returns. As for Seng Plantations Holdings Berhad, it has a beta of 1, which indicates that it is equal to the broader market systemic risk. The weighted average cost of capital, WACC, is the rate where a company is expected to pay on average to all its security holders to finance its assets. When beta and rate of return on equity increases, WACC will increase. An increase in WACC indicates a decrease in valuation and an increase in risk. The WACC of the firm is 11.05%. Suppose that lenders requires a 25% return on the money they have lent to a firm, and suppose that the shareholders require a minimum of a 5.38% return on their investment in order to retain their holdings in the firm. On average, projects funded from the company's money will have to return 11.05% to satisfy debt as well as equity holders. If the only money in the pool was 12.5 in debt holders' contribution and RM2.70 in shareholders' investment, and the company invested 100 in a project to meet the lenders and shareholders' return expectations, the project would need to generate returns of 12.5 each year for the lenders and 2.7 a year for the company's shareholders. This would require a total return of 15.2 a year or 11.05% WACC. Seng Plantations Holdings Berhad investment return for the current year is expected to be 5.38% invested. The current development of the firm, Seng Plantation, would prefer to liquidate the asset in order to maintain the cash flow of the firm. The ROA of Seng Plantations Berhad is 5.21%, which indicates that the firm is good at converting its investment into profits. The higher the ROA number, the better, because the company is earning more money on less investment. The ROE of the firm is 5.9%. In the table, in the report, the trend analysis shows that for every 5 years, how the return on equity changes over time. We can see that the ROE for Seng Plantations Holdings Berhad is below the market benchmark, but there is a steadily rise over the past 4 years, which is considered a good sign. A company capitalization is the composition of a company's permanent or long-term capital, which consists of a combination of equity and debt. In Seng Plantations Holdings Berhad, the long-term debt to equity is 0, as well as its total debt to equity. This indicates that the company has no debt. The group's dividend policy of distributing 60% of the group's profit attributable to shareholders is a testament to our commitment in creating and enhancing long-term value for shareholders. For fiscal year 2015, the group has declared and paid a total dividend of 8 cents, constituting approximately 66% of the group's profit attributable to shareholders. The dividend was paid through 2 interim dividends, with the first interim dividend of 3 cents paid on 29 September 2015 and the second interim dividend of 5 cents paid on 24 March 2016. According to Seng Plantations Holdings Berhad Annual Report 2015, the basic earnings per share of the firm decreased from 16.04 cents in 2014 to 12.06 cents in 2015. The firm has decided to pay the dividend in 2015, even though it had forecasted the drop of their profit margin in 2016. According to Seng Plantations Holdings Berhad valuation ratios as published on Reuters, it had revenues for the full year 2015 of 434.88 million with a consensus of 430.03 million. This was 12.25% below the prior year's results. The average growth rate is negative 8.97%, which can be calculated using the formula growth rate equals to end value minus beginning value over beginning value. This indicates that Seng Plantation Holdings Berhad experienced a decrease in real income where it is mainly caused by recession. This marks the end of my presentation on Seng Plantations Holdings Berhad. Thank you, Dr. Rasidah.